Hello everyone, thanks for joining us today and welcome to this educational presentation of how to trade with consistency in a down market. Now we've all experienced what the market has done lately. It's gone pretty much straight down, had a few bounces. As a matter of fact, today we have a little bounce going, not that much, but actually more of a bounce yesterday. But I want to share with you this chart right here. This is a chart in the S&P 500 on our platform, a chart, the PTS Primo charting platform. Now, as the market was going up from the summer into October, well, just about everyone was doing well. In fact, it's really easy to be consistent in an up market. Most strategies, most systems, trading plans are based off of trading while the market is going upwards. But what happens when the environment changes the way it has since the beginning of October up until now? That's where everything goes into the trash can. That's where nothing works anymore, and that where most plans all of a sudden just stop being consistent, and you rack up a series of losses. And most traders at this time pretty much give back everything they've made while the market was going up in a short period of time. Well, it's really sad because actually there are ways to trade in both directions, while the market's going up and while the market's going down. For example, the method I'm going to be sharing with you today actually made some nice substantial gains as the market was going up. These were two setups right here. But what's more important is that this particular method I'm going to be talking about today actually generates some really highly consistent points of entry on the way down. And don't you think you would have liked to have taken advantage of these points to sell the market? Well, this is the method I'm going to be talking about today. I'm introducing strategy number 9. And the reason why we say introducing is because it is fresh. It is new. There's no one that has traded it other than myself. And in fact, the actual course is, still that new that we are getting new diagrams and new snapshots of charts that are happening on a daily basis. In fact, I will show you later on today examples of strategy number 9 with some setups that occurred yesterday while the market was going up with that nice bounce we've had. And this is all going to be done really easily and simply on our new PTS Primo charting platform. This is the educational platform that teaches you how to trade in both up as well as down markets. So this promises to be a really informational and a really exciting presentation today because we're talking about something brand new. So welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. 9 years ago, going on 10 years, in 2019, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders around the world. And we've done that in our nearly 10 years of collaboration. We have students in over 115 countries around the world and in every state in the United States. And we're basically different from other educators in that we're simply just trying to give you the tools and information so that you can be in charge for the very first time in your trading career, so that you can be able to make your own trading decisions. The entire industry is built around you just blindly taking orders from someone or something else. Well, we're different from that. We want to give you information so that you don't have to take orders from someone in a chat room. You don't have to find out what to do the next day from someone on TV. You can make your own qualified decisions by having the sound fundamental education. So this is the gap we provide. This is what we fill in for you so that you can be in charge of your own trading destiny. I've been trading for 41 years. I started my career on the floor of the Pacific Stock Exchange. I was on the stock exchange for a total of 16 years, and now those years I was a specialist. A specialist is just someone who made markets in roughly about 50 or 60 stocks. So I was a specialist during the crash of 1987. Okay, that was the great bear market then that lasted for just about this same amount of time. But where we've seen the market go down 500-600 points, the crash of 1987 will be comparable to the market being down about 4,000 or 5,000 points in one day. So I was making markets during that day, the crash of 1987, also in the bull market that followed. So I've traded just about every system, every technique you can think of. Most of the same things are being remarketed and rebranded, but they're just the same basic notions. I know what works in terms of consistency. I know what has worked over time, and I know what doesn't work. So why waste your time, and most especially your hard-earned money, searching for that holy grail when we can just give you the sound fundamental education so that you can get on that road to consistency? So this is what we do at Specialist Trading and Pro Trader Strategies. And today you'll see the results of a brand new method that we have that is, when I say brand new, it is so fresh. No one has traded it other than myself, but we're really excited to be having it ready for you in an early bird special. So before we begin, please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this new strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. So once again, as you're taking a moment to view our disclaimer, I would like to invite each and every one of you, if you haven't done so already, to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. You may want to copy that down if you haven't done so already. We have a lot of followers, but we always pick up new followers, and we like to give you different bits of information, some signals that our strategies have generated to little bits of financial wisdom. So feel free to follow us on Twitter. I post different information on a daily basis. Okay, so as I stated at the very beginning of this presentation, we're a little bit different from other webinars you may have attended before in the fact that we are only about educating you. That's our only goal. Even though our strategies and methods generate signals, and they automatically generate them on our platform or on different platforms that you may have, it's all about educating you so that you can be in charge and make your own decisions. We want to teach you first why a buy or sell signal was generated. We don't just want you to blindly take it. So as you see here, my goal is not to force feed you signals the way so many other websites do. Our goal is to teach you how to trade with a specialist edge. This is the same edge that turned my trading around some 41, almost 42 years now. Hopefully it will be able to turn your trading around and sustain you so that you can be able to trade for a good 4 decades as well. Okay, so since we have a lot of information, I want to show you a lot of slides, and since this is brand new, I know you're going to have a lot of questions, but please wait till the end to ask any questions. If we stop at every slide, we'll be here far too long. I know you want to get back to the markets. So if you have a question, just wait till the very end of this class, and then I promise I'll get to each and every one of them. The main question that I will answer at this point is the most common, and that is this being recorded? Yes, it is. So if you have to leave early, or if you are having difficulty seeing or hearing me, don't worry. We will send each and every one of you a link to this recording so that you'll be able to watch it again at your own leisure, okay? So once again, if you have any questions, please wait till the very end of class. All right, let's begin now. Here are some of the highlights of this particular new strategy. As I say new, it's entirely new. Once again, no one has traded it. Every time I've given strategies before, it's been something that, that we've tested out. We've had a number of our students use before, or we've already had it in the markets with people trading. This is entirely new. And I've been trading it roughly for about 6 months now, off and on, just to make sure that it is something presentable. It uses the same concepts and techniques that we teach in our courses. It uses the same philosophy that we believe in, that we always are in sync with the overall trend. And it's designed to trade pullbacks using 2 simple indicators. Okay? Now, in our promotional copy, we actually say that there are only 3 rules. This is how simple this technique and method is. In fact, this is the simplest trading method I've ever traded in my 41 years. That's how simple it is. In all actuality, I believe there are actually only 2 rules. The basic format of this strategy only has 2 rules, which will generate an either buy or sell signal. So it is extremely, extremely simple to apply. The beauty of it is that you can apply it to any market, any time frame, or any direction. Now, I'm going to primarily just focus on stocks today, but trust me, I have tested it out on currency pairs, on E-mini futures. I've looked at it hypothetically on commodities. It just works just about every market and every time frame and every direction. So another added advantage of this is that if you like to go out to a higher time frame, such as weekly bars, which I'll show you some examples of those as well, or even monthly bars, you can apply options to this. For example, just this last month, some really great signals were generated in the market on daily and weekly bars. If you wanted to really grab as much as you could, and I know a lot of people don't have the account size or like to actually short stocks, well, you could have purchased puts or some type of spread strategy to the downside, and you could have done very well trading options. So this is one of the best things about this particular method, is that you can apply option trading to it. Well, now remember, all the option entries and exit fully based off of where they are on the stock. So it's a little bit different though with option trading, that because of the premiums involved, you're going to get different price levels. But we base all of our entries, exits, and stop placement off of the actual stock. So you would just follow accordingly if you're trading options. As with all of our methods, we always instruct our students in the course that we'll be having for this particular strategy to always paper trade first. As I just said, I paper traded this for about 3 months, and then I've been trading it for a good 2 or 3 months, but I still paper traded it. So there's nothing wrong with paper trading. If you look at any industry, any course of action in the world, you always have to rehearse, you always have to practice, you always have to paper trade. It's no different from trading. So don't feel as if paper trading is useless. It really is extremely important, and we require all of our students to first paper trade. Now, as with all of our methods and trading techniques, we are based in consistency. Consistency actually means that you will have losses. That's really what consistency means. But consistency means that those losses will be able to be recouped at times, hopefully quicker than or sooner than later, because it will have a 2-step forward, 1-step back approach. So when you have a 1-step back approach, meaning you have a small loss, the method is very consistent, meaning that it's able to make it back at times. So that's what we mean by consistency. We're not afraid to say that we will have losses, but if you manage it correctly, and if you continue to trade the method, you will see that, once again, it's a 2-step forward, 1-step back approach. Consistency is different from hitting home runs, because if anyone promises you that we have a strategy or a system that hits these tremendous home runs, it's been my experience that home run hitting systems usually give everything back. It's kind of like the proverb, the brighter the sunshine, the darker the shadow, okay? Because the more money you can make on a big home run, it's just as easy to lose it because you have a lot of risk involved in that. What we do is the opposite. We're looking to hit singles, because singles is what's going to keep you trading 10, 20, 30, 40 years down the road. I've known many traders who hit home runs and then lost it all, and none of them are trading anymore because they've lost all their capital. What kind of a mentor or teacher would I be if I gave you some type of system that made you tons of money in one trade and then gave it all back on the next? You know, that would be losing you money. I don't want to do that. I want you to be trading 30, 40 years down the road. That's why we always want to give you step-by-step process type of trading methods that are very consistent. We're not going for the home run. Now, home runs may be acquired every once in a while. You will see examples every once in a while where you have these tremendous home runs. I may show you a couple today, but that's not our goal. Our goal is simply to be consistent. Okay, now if many of you may not be familiar with what a pullback is. Let's just give you a brief refresher course. A pullback actually is looking for a trend to be established. As you see right here, this is the beginning of the trend where that up green arrow is. But then we hit some type of a bracket, some type of an arrow here or area where we start to kind of falter. And this is where people usually think, well, this rally's over, we're probably going to come down and start a downtrend. If you're a pullback trader and you have the correct parameters, as we see here, you actually know that once you get to a certain level or once the requirements are met, this sell-off is prime area to buy. So this is where you want to buy in the bracket zone, because usually after that, a correct pullback strategy will get you in just before the trend resumes upward. Now that's for a pullback buy. If you're selling, it's the opposite. You're looking for some type of a downward trend. And then usually that downward trend stops and you start to bounce and you create this type of bracket zone here where it's going up. Where most people think, well, the market has bottomed out, it's time to buy. Now think of today. Yes, this past month we've been going straight down, all right? What did we do yesterday? We had a big bounce in the market, 1,000 points. That's similar to what is happening here because the overall trend is still down. Now when you get to a certain level, when the requirements are met, that's where this bounce should usually, doesn't have to guarantee, but usually should end. That's your selling point, because if it's a correct analysis, the trend should continue to the downside. So that's what we're looking for. That's the basis of this method. We're not looking to pick bottoms. We're not looking to pick tops. What we're looking for is a pullback. So in an overall uptrend, we're looking for sell-offs to buy at a lower price. In an overall downtrend, the way we currently are, we're looking for a bounce the way we currently have right now. And once all the requirements are met, we're looking for a point to sell because most likely the trend will continue lower. Now, here are some more highlights about this particular method. It employs two simple indicators. And when I say simple, I really mean simple. In fact, I'll share with you the first one because it's just about in, I would say, 80 to 90% of all of our trading methods. It's the 50-period simple moving average. We call that our buy-sell line. But what is different about this particular method is the relationship between these two indicators and the price, because that will automatically produce what a signal is, okay? So what the relationship is between these two indicators and the actual price generates the signal. Remember, in an overall uptrend, buy signals will be generated during a decline. That's the definition of a pullback. And in an overall downtrend, sell signals will be generated during a rally. Now think of the markets once again. Look at your daily S&P or your daily QQQs or whatever, the Dow Jones Industrial. We are in an overall downtrend. It doesn't take rocket scientists or some master indicator to tell you that. Just look at the last month. We've been going straight down. What have we been doing the last day or so? We're bouncing, okay? In an overall downtrend, as we see here in the last paragraph, sell signals will be generated during a rally. So that's the beauty of this particular new strategy, strategy number 9. Just want to give you a little heads up there. All right, so the one indicator we are going to be applying is the 50-period moving average. That is called the buy-sell line. And why do we call it that? Because it tells us whether we should be buying or selling. That tells us the overall trend of the market. All right, so let's look at some down market examples. And these are very current and recent ones, okay? As we see here, here's Costco. Now, someone looking at this, once again, would say, well, yeah, we've kind of had a nice bounce here, and we've come down, but overall, we're basically just in a range market, Steve. We're not really doing anything, so I don't really have any idea what is going on or what the overall trend is. And the chat room I go to says to stay away from this because we're just kind of going in a range, and that's how you get whipsawed, okay? Sound familiar? This is the way most people make their trading decisions. It's our job at Pro Trader Strategies and Specialist Trading to educate you so that you don't have to rely on someone telling you what to do. The first thing you'll do, and especially on our platform, we make it simple, is click on the buy-sell line right here in the upper green strategy tab. And automatically, you'll get a 50-period moving average, okay? Now, this tells you in accordance to where price is in relation to the 50-period if you're in an overall uptrend or downtrend. Now, as you can see, price is below, price is above, price is below. But right here, even though we went above it, we closed below. And according to the other requirement of this particular strategy, a sell signal was generated right here. All right. Now, there are numerous ways in which to enter. There's a basic format way to enter, and there's numerous other ways in our courses to enter. Either way, this is your signal saying that most likely the market's going to be going lower. Now, this was, I believe, on the 12th or 13th of December, and it fell 37 points in the next week and a half. Okay. Now, someone could say that's a home run, but that's in down markets. This is how you have consistency, by looking for these little bounces. But you have to have a plan or a technique that's able to meet the requirements to tell you when the bounce is over. So according to this really simple new strategy, there was a little bounce right here. It only lasted 2 or 3 days. But at this point, this particular method was telling you the bounce is over. It's time to sell. We're not going to go higher. This is simply a bounce in an overall downward trend. Same thing here where we look at Facebook. Now, everyone knows Facebook's been going down. It doesn't take, genius to know that, okay? But once again, just for, to keep it in line with the analysis, if you added the 50-period moving average, we knew well in advance, back here in August, that the overall trend was down. So there was no reason even to bottom fish for this until price was consistently above. So as long as price is below, we just want to be selling. And you want to be selling as a pullback trader every time it bounces. The trouble is, most people don't know when the bounce has concluded or if it's going to continue going higher and higher. That's the beauty of strategy number 9. What I back tested for 6 months basically is that it has a really high consistency of finding out where these bounces are and when they've concluded. For example, as early as August, a sell signal was generated right here at the top of that little bounce. Now, depending on which exit point you want to use, you could have taken a point gain and gotten out. You could have ridden it all the way down here if you wanted to, or, down to these points. But be that as it may, if you had gotten out, well, not to worry, because another bounce was generated right here. The same strategy met all the requirements to sell again. And look what happened in the days to follow. If you had decided to cover, Not to worry, there's another sell signal on that bounce. You see, this is the beauty of this particular method. That's why I say it is so consistent, especially in these downward markets, because every time you get a bounce, everyone gets excited and starts to think, well, this is it. I better buy because this is the bottom. I'm sure a lot of people were thinking that yesterday. Well, we don't know that yet. It may have been the bottom yesterday. It may be just a bounce like you're seeing right here. If the strategy generates a sell signal, we will be most likely getting into the short side of that. But that remains to be seen as of now. Now, had you taken that very first sell signal right there in the beginning of August and held on up until this past week in December here, well, guess what? That's 58 points to the downside you could have made. Let's say you had long-term puts, okay? Or let's say you were just actually short the stock. How about NOC? Well, here's another example where someone could say, gosh, Steve, it looks like we bottomed out here. And you know what? I go to this trading room where they follow support and resistance. They follow what the institutions are doing and what volume is doing. And they have a special indicator that tells you when something is bottomed out and something is topping. And right here, it said that, you know, we did not confirm these lows. The institutions were buying. So I've got to be a buyer here. All right. All right. Listen to everything I just said. Everything I made my decision on what to do was being based off what someone or something else told me what to do, what the institutions were doing, what someone in a trading room was doing, what some convoluted indicator was doing. They weren't based off of what the chart is telling you. All right. The first thing we want to do is add the buy-sell line. All right. Where is price in relation to that? Price is below. So that tells us that the overall trend is down. We're not going to buy anything below the 50. It's that simple. It doesn't have to be rocket science. You don't have to overcomplicate things. But for some reason, we think the more complicated we make our method, the more valid it will be. But it's the opposite. The simpler the method, the more valid it will be. So it doesn't get any simpler than that. Automatically, we know that no matter what someone says in some chat room, we're going to be sellers of this. We don't care because the market is telling us the overall trend is down. Okay, so now we add strategy number 9, and we add the other requirements to this particular method, and guess what? It's generating a sell signal where everyone else was saying, well, you got to buy this. The institutions are buying this. This is the broke, resistance. No, we don't care what other people are doing. We only care what the market is telling us. And here it's telling us that this bounce is most likely over. It's like when you throw a tennis ball up in the air, all right? For the first, I would say 90% that's going up in the air. It's going off of speed and velocity. But the last 10% is just strictly going up off of momentum. There's really no more speed or strength left in that upward movement. It's just basically off momentum. That's what strategy number 9 can find for you. It many times will find out when it looks as if you're in an uptrend, but for all intents and purposes, it's just the last portion of momentum of the bounce before it goes lower. So where everyone else may have been buying NOC, you decided to listen to the market, not to listen to these outside sources. And guess what? Coming into this last week of December, you could have managed to have 42 points in your favor, okay? This is the beauty of learning how to listen to the market, and this is the beauty of keeping things simple. Remember, there are only 2 indicators used in this particular method, and you're seeing one of them right now. It's the 50-period moving average. There are basically only 2 standard format rules that generate a setup. That's how simple this is. It's been my experience that in my 41 going on 42 years of trading that it's the simple things that work, not the complicated ones. Now remember, we looked at this chart here in the index, the S&P index, okay? As the market was going higher, well, it doesn't take, you know, a 50-year veteran to tell you that we're going higher, and all you have to do is look at the 50-period moving average. Because when price was above, that's the market telling you it's going higher. But once we had consecutive closes below in the beginning of October, that was the market telling you, guess what, I want to go lower. So there's no reason to look at, tariffs or fundamental news or indicators. The market told us in October it wanted to go lower. You know, I had a discussion at a Christmas family gathering where people were saying, well, Steve, is this interest rate thing really messing up the market, or the tariffs? Or, you know, you have all your students and people short around the world this last week. And I said, well, I don't tell them anything. They have all the information in front of them. And he said, what do you mean? I said, well, all you had to do was plot a 50-period moving average, and you would have known in October that the market wanted to go lower. I don't tell them what to do. This is what we do. We provide you with the information so that you can decide. So if you study these simple tools, you would have made the decision yourself that most likely you should be out of the market. And you would have saved yourself about 3,000 or 4,000 points to the downside. Now, once again, strategy number 9 is able to generate buy setups as the market's going higher. You see this short little sell-off here and then another sell-off. This is a pullback trade. Now that we're in the overall downtrend, you're looking for bounces. Look at the bounce that happened here. Most people thought, well, this is just, a short-term sell-off. We're probably going to go back and make new highs. And look what happened. 2 sell signals are generated on the way down at each one of those bounces. Now let's look at some upmarket examples, because I know we're in an overall downward trend right now. And so you have to be able to trade when the market is going down. But this same strategy can be applied with upward markets. As we look here, we see an example in PG. Someone could think, well, we're topping out, we're going much lower. All you have to do is click on the buy-sell line, and we see that the 50-period moving average is below price. So that means that the overall trend is up. We're not going to sell anything. We're going to look to buy. So this most likely is a pullback. We apply strategy number 9, and as we can see here, a buy signal is generated. Easy to identify once you know the rules, and the stock goes up 5 points. Not a lot, but at least you know not to sell. At least you know this should only be looked at from a buyer's bias. Another example in Yelp, okay? Once again, someone would say, Steve, this is kind of going lower, but the rallies don't last, and it looks like we're going to break this support. Now, I know the institutions are supporting this, but they don't look very valid, and the volume isn't showing the consistency to the upside. So I would think that this is most likely going to break this major support. I can't even make up these excuses fast enough. This is just the way most people trade. There's just too many rationalizations that don't mean anything. There's no consistency. Why don't we just add the 50-period moving average? And what is that telling us? It's saying the overall trend is up. Until price is consistently below that, you should only be a buyer. You should only have a buyer's bias. We apply strategy number 9. And to show you how new strategy number 9 is, we don't even have a tab for it in our strategy tab yet. It hasn't been created by our programmers, but it will be coming soon. But it doesn't matter, because you'll be able to know the rules. This is why we teach you everything anyway in the course. And you'll see a buy signal would be generated here, and another buy signal would later be generated here. The stock went up 8 points. And then lastly, look at Apple. Now this was in September coming into October. Okay, once again, it looks as if we're just in a range, not really doing anything. Where is price in relation to the buy-sell line? Price is above. A buy signal was generated. The stock quickly went up 15 points coming into October before the market sold off. So it can generate buy signals as well as sell signals, okay? Doesn't matter which direction, doesn't matter which market. Now, there are different time frames that you can apply this on as well. We suggest option traders to trade this with weekly or even monthly bars. It's not a requirement. You can use whatever time frame you like, but you'll get those larger moves because it's all relative. You'll be looking at larger time frames. For example, here's a chart in Netflix. It's a weekly chart of Netflix going back 2 years. Now, at this point, it had kind of a sideways to upper movement here. And then we all know what it did coming into this last summer in 2018. It took off and went straight up, okay? Someone looking at that will say, well, yeah, well, Steve, we didn't know to buy it this whole time. Well, yes, you did. You knew to be a buyer or have a buyer's bias, because if you apply the 50, price has been above the 50 going back to April 2017. So you know you shouldn't have been selling, okay? Now, if you applied the strategy to this, you could have purchased options or actually invested in the stock, because a buy signal was generated way back here. And if you missed that, well, guess what? Another one was generated here. Had you taken the first one and held on to the end of the summer, that's 270 points. Okay? Here's another example in Snapchat. Now, we know that, this past year, Snapchat was the darling of the IPOs. It was supposed to be the new Facebook, and it didn't work out very well. I think it came public roughly at about $25 or $27, $28, okay? Let's say you had purchased it, and now you were thinking, gosh, I don't know if I want to stay in this thing. This is not performing the way I wanted to, and I don't want to be holding this for another 10 years to break even. And you want to just figure out a good place to get out. This is where this can help you as well. Here's a weekly chart. Let's say you purchased it at 25 when it came out. You apply the buy-sell line, and right here in April of this past year, we went below it. So now you're saying, well, this is the market's telling me it's going to go lower. So you could still apply the strategy number 9 rules, and it generated a sell signal right here. If you use that to exit, well, guess what? You saved yourself 8 points to the downside. This is coming into this last week in December here. So you can actually use it to get out of positions as an exit point or a stop placement, positions that are not working correctly. On the little bounce, get out. Let's look at another example here in DVN. This is a monthly chart, all right? This is for long-term investing, or if you have these leaps, these options that last much longer. Someone looking at this would say, well, gosh, Steve, this is in a range, right? This is just kind of going up, going down, going up, going down. In a sense, it is in a range, but it's in a range in an overall down market because price is below the 50. See, the same rules apply if we're looking at a daily bar or if we're looking at a monthly bar. It makes no difference. So if on a monthly bar, as we're looking at now, price is below the 50, that means the overall trend in a monthly time frame is down. So we don't want to buy this. We can apply the same rules, the same 2 simple rules. Nothing changes, and a sell signal would have been generated here. You could have taken advantage of 15 points to the downside if you had a leap or some type of 5 or 6 months option. Once we had another bounce here, remember, in a downtrend, in an overall downtrend, a bounce is simply a place to find a pullback sell area. And this is what strategy number 9 does. It found another sell area right here, a quick 10 points in 1 month. And look at this bounce, all right? Another sell point right here, a quick 20 points, okay? So we've looked at daily bars, we've looked at weekly bars, we've looked at monthly bars. And someone's saying, well, Steve, I don't trade any of these bars. I'm a short-term intraday trader. Okay, let's look at yesterday. Here's a 5-minute chart of the spiders, okay? We all know that the market was taking off yesterday. A lot of people said, well, in that initial bounce, that this is just some type of overreaction. We're going to sell off and continue the slide to the downside. Well, we apply the 50-period moving average on this 5-minute chart. The same rules apply until you have consecutive closes below. The market's telling you it wants to go higher. Okay, this was around 10 a.m. Pacific time yesterday on a 5-minute time frame of the spiders. You apply strategy number 9. Guess what? On this pullback, a buy signal was generated. And we all know that the market continued to go up till the end of the day. It went up 8 points higher, which would have generated $400 per contract, or if you were trading futures. But 8 points on the E-mini, which is a lot of points on the Dow. If you're trading the futures, it probably would have been much more than that. So, 8 points on a 5-minute time frame is a lot to capture. The same rules can be applied, once again, to monthly, weekly, and even 5-minute time frame. Okay, let's review. Now, I'm sorry, once I had to tell you, because of the simplicity of this particular method, I couldn't give you more information. I know in past webinars before, I've given you a couple of 2 or 3 even of the basic rules, because some of our methods have 5, 6 rules, and I've given you half of them. Well, I can't give you much more information because of the simplicity. It is so simple. If I gave you the next rule, well, then you know the strategy. That's how simple this is. It is really easy to calculate, but it's so powerful in its consistency. I'm not going to sit here and tell you that every trade works. There are some that will generate small losses, but look at the consistency I just showed you here. Every time frame, every direction, if you hang in there long enough, you'll be able to hopefully recoup those losses. Okay, strategy number 9, as you can see, is a brand new strategy. We don't even have a tab for it on our platform yet, but is it in the works of being made? It's designed to trade pullbacks with 2 simple indicators. I shared one of them with you, which is the 50-period moving average. That tells us the overall trend. Remember, in a pullback mode, you have to know the overall trend and then look for the bounce in the opposite direction or the sell-off in the opposite direction. The beauty of strategy 9 is it works and can be applied to any market, any time frame, and any direction. Another advantage is that you can apply options to this, okay? You've seen some of these really nice swings to the up and downside. Well, if you don't have the capital or you don't like to trade stocks, if you like to trade options, this is great for trading options, okay? But with all of our methods, once again, it is a requirement that all students first paper trade. We don't just want you to jump in. Even though this is the simplest trading method I've ever traded in my life, most likely people will execute it incorrectly because they jump in too quickly. You have to be diligent and know the rules, okay? Our edge is consistency. Consistency means there will be losses. All of our methods have a 2-step forward, 1-step back approach, okay? We will have losses from time to time. That's the 1 step back, but we're confident in that we can go 2 steps forward. Now, you owe it to yourself to start out 2019 in the right direction. I know most of you are not happy with the results you have as we conclude 2018. I know most of you thought you'd do much better. I know most of you thought, well, this is going to be the year where I really start making those profits, and most likely you're very disappointed or frustrated in the trading because you see no success. You see no rise or consistency in your trading at all. Well, don't worry. This is the beauty of what we teach you, and we have a great special offer for all the attendees today. We're going to offer you our super end of year special. This is strategy number 9, along with our PTS Primo charting platform. You're going to get detailed video course instruction. You're going to learn all the exits, all the entries, all the stop placement for this particular method, the entire course rules. Now, if you don't want to focus on our platform, don't worry. We will include the strategy add-ons for other platforms you may have, such as TradeStation, Metastock, NinjaTrader, MT4, Sierra Charts. We will supply that for you so that you will get the up and down arrows for that as well. Okay? You also, in this, will get 1 year of the PTS Primo charting platform free. That's a $1,740 value. You're going to get 1 year free. Now, the platform just does not come with strategy number 9. There are dozens of other tools and methods and indicators to help you become a more consistent trader. For example, the scanner. You'll be able to scan for nightly signals so that you don't have to look through hundreds of stocks every night or markets to find a strategy number 9 buy or sell signal. And including with this, you'll get continuing educational correspondence. This means that you'll get my private email address. You can contact me whenever you'd like. If you're having difficulty understanding the method, or if you like my opinion on a certain setup, you can contact me and I will get back to you. In fact, I was corresponding with students just moments and minutes before I started this presentation via email. Okay, this is our super end of year special. Let's see how much this would cost. Normally, if we put these two together, the prices of these individually would cost you over $4,700. Please do not worry. We are not going to be anywhere near charging you that. Okay, we know it's the end of the year. We know you've had expenses for the holidays. We're going to drastically reduce the price. We're going to have an early bird sign up for strategy number 9 for $19.95. This is a nearly 60% discount. You're going to save over $2,700. And we're going to take it a step further. If you can't come up with the $19.95, not to worry. For a small deposit, you can create a payment plan with ProTrader Strategies. They handle all the discounts, all the payment plans, and they can construct a payment plan for you. So you can still be up and running in the course and be some of the first initial traders to be trading this alongside me. And for a small deposit, you can be up and running. So even if $19.95, you're not able to come up with that sum, don't worry. They will construct a payment plan for you. So here's how to take advantage of this, because trust me, 2018 is over. It's done. We have one more week, not even a week left in the year. A year from today, you will have wished you became a member of this course. You don't want to be here a year from today on December 27th, 2019, coming to a webinar of mine and me showing you all the great signals and setups we had throughout the year using strategy number 9, our year-old strategy. And you don't want to be saying to yourself, gosh, why didn't I take advantage of that? Now the price has doubled, or now they don't have that great discount anymore. Okay? A year from today, trust me, you will have wished you became a member of this course. Invest in yourself. It's time to really get your trading started out on the right track. You can do that alongside all the other initial traders. You'll be the first to be trading strategy number 9. Okay, how to take advantage of this? Contact ProTrader Strategies. I developed the platform with them, and they handle all of the different tech support with the platform, as well as the pricing. You can email them at the email address there, or call them directly at area code 310-598-6677. Now, I would suggest personally contacting them. There's absolutely no obligation. But if you wanted to get more information about setting up a payment plan, you could do that with them, and you would be able to still be up and running with a small deposit. Now, that link below at the very bottom is the link that will give you more information, and the sign-up course, it will take you there, but it's not a live link. A live link has been posted in the chat box. So there's more information there. And so you can have a lot more information on that link, or you can contact Pro Trader Strategies. Now, I promised I would take questions. We have about 15 more minutes left. So if you do have any questions, please do not hesitate. Just go to your chat box right now or question and answer box and type them in, and I will try to answer each and every one of them, okay? Let's see, we have a few here. It says, would the year-end sell ending soon, January will be different? Well, okay, with the year-end selling ending soon, will January be different is basically what they're asking. Well, remember, we are an educational company. We're not a predictive company. In other words, I know a lot of websites have all these predictions and all these wave counts and all these institutional factors telling you what is going to happen. That is entirely the opposite of our philosophy. Our philosophy is we don't try to predict anything. We don't try to tell you how low or how high something will go. What we do is simply listen to the markets, which no one else does, in my opinion. I haven't found anyone that does this. We listen to the markets through our tools and through our indicators and through our different techniques, and let the market tell us what it wants to do. And all our job is simply to jump on board in that direction. So if the market continues to go down in 2019, we're just going to be sellers. We don't really care. We don't care how low it goes, because if you're in sync with the market, you're going to be consistent. You see, you're only a loser when you're out of sync with the market. You're only losing money when you're doing the opposite of what the market wants to do. I mean, think of that. When you buy and the market goes down, you're out of sync with the market. The market is not behaving incorrectly. The market is not doing what it's supposed to do. The market's doing whatever it wants to. You're behaving incorrectly by being out of sync with it. So all of our methods are designed to teach you to listen to the market, to see what it wants to do, and then we apply some structure in the form of a strategy so that you can be in sync with it. So we don't predict anything. If the market, according to our tools and insight, tells us that it's changed its mind and wants to go higher, then we don't care. We're simply going to change direction and go with it. So we take all of the complicated issues out of it. You know, there's no reason to try and figure out what the markets are going to do. We don't care. Our job is just simply to listen to it and then jump on board, okay? Can one use this strategy 9 with the PET D? That's a good question. For those of you who aren't familiar with us, with the PET D, that is another great tool we have. At this point right now, you don't need the PET D with it. It has a high level of consistency. And also, with the PET D is great for determining the short-term trend. But because we are trading pullbacks, we can't confirm it because we're trading the opposite of the overall trend. So it gets out of sync a little bit. So at this point, I see no need to use the PET D with it. As we look further and further, maybe get some insight from our students, which we get a lot from students who have the PET D that tell us different techniques and ideas. Maybe we will find something. But as of right now, it's not a requirement, okay? Is strategy number 9 better than strategy number 4? Well, once again, better in terms of what? You see, everyone, we could only answer that question if everyone traded the same way, which once again goes against our philosophy. I've even tweeted about this just recently, in that no two traders should ever trade alike. And so the only way you can say if something is better than something else is when traders trade the exact same way every time. But see, everyone trades differently. Some traders trade strategy 4 and they use a certain entry technique, which we provide, or they use a certain exit, and that's perfect for them. Whereas others may use an entirely different entry, an entirely different exit, and that may not work for you. So there's no such thing as one is better or one is worse. The only thing that is better is the one that makes you feel comfortable. What we're saying with strategy number 9 is that strategy number 9 is extremely simple, okay? Now, strategy number 4 is different from 9 in that strategy number 9 is a pullback. Remember, we're trying to sell at higher prices and trying to buy at lower prices in accordance with the overall trend. Strategy number 4 is a pattern recognition strategy. Sometimes you'll be able to sell at higher prices, sometimes you'll be able to buy at lower prices, but it's not requirement. It's just looking for a specific pattern, and once you find that pattern, you either buy or sell. Whereas strategy number 9, in an overall downtrend, as we've seen as of late, we're looking for a bounce, as we're having right now. In an overall uptrend, we are looking for a sell-off, okay? So that's where they're different. The only thing that's wrong, the only thing that is incorrect is when you're not comfortable with a particular method or you're trading it incorrectly. But there is no such thing as better because everyone is trading differently and should trade differently. You should never trade or go to in my opinion, go to a signal service and take the same signal that someone else is taking. It's not that it's not going to work, but it's that you're taking yourself out of the game. In other words, you're not a part of the process. You have to make the decision. In my 42 years of trading, the only way you become consistent so that you can trade for decades down the road is by making your own decisions. Okay, so therefore, if you make your own decisions, you won't be trading like someone else. You'll be trading differently because it'll be according to your own parameters. So that's what we provide you with, all of this knowledge and ways to do that. Will this work in the penny stock volatility world? Yes, it will. It works in any market where there is an overall trend and pullbacks. But please remember, because of the gains or the small gains or movements in penny stocks or the volatility, it's all going to be relative. So where you saw 42 points, in Costco or some of the stocks we showed, you may, that happened in a week or two, you may, get, 1 or 2 pennies or, 20 cents. It's all relative according to the price of your stock. But yes, it works in any market, any time frame, provided there's an overall trend and provided there's pullbacks. Okay? That's the beauty of this. And remember, we're not sitting here telling you that every trade is a winner. I just want you to know that. But I have been trading this, paper trading as well as literally trading this for 6 months. And it's highly consistent, meaning that many of the times when I experienced small losses, I was able to make them back, sometimes even on the next trade. But that was just my experience. But that's, I can only tell you for what I've gone through. And I trade different markets, different time frames, different directions. So, take it from someone who's traded it. But it is, I cannot stress enough how simple this is. It does not matter if you're a 50-year hedge fund trader or if you've been trading 50 minutes. That's your entire experience level. It makes no difference. Everyone, with all of our methods, strategy 9, strategy 4, strategy 5, strategy 1, they all get the same basic format. And then we work out from there so that you can trade it according to your means. We don't want everyone to trade the same. In fact, we encourage you to trade it differently. And I know someone will say, well, how do I trade it differently? That's what we do. We provide you with different options. So in other words, let's say you get a signal to go long or go short. You have different entry points you can decide to use. Some are more aggressive. Some are more conservative. What type of a trader are you? If you're more aggressive, then take the aggressive entry point. Others would say, well, Steve, I like to be in the trade for a long time. Well, then use one of our exit points that allows you to be in the trade for a long time. Whereas others would say, no, Steve, I like to get in and out. I want to take the next trade. I like a lot of trades. Okay, then you will use this exit point. Okay. So do you see how we provide you with the information, but it's up to you to decide how you want to trade it. This is why we say no two traders should ever trade alike. David asks, could you give an example of using the strategy on a 5-minute chart for today? For example, the spider. Well, before I go any further, David, this is not a live presentation in terms of having a chart. I don't have chart available right now. And if I gave you an example, I would have to be using the indicators and I would show you and you would learn exactly what the strategy is. I can't do that right now. I did show you a 5-minute chart on the spiders from yesterday. So, I don't know if you joined us late. But I showed you that it was an 8-point gain on the spiders in roughly about an hour or so on yesterday's upward market. So go back and look at the tape of this, and you'll see that if you're above the 50-period moving average, you know that you're only going to be a buyer, and you're looking to buy on these sell-offs. If we are below the 50-period moving average on a 5-minute chart, that means you're only going to be a seller, and you're looking to sell on the bounces or the rallies. Now, most people have trouble with this because they say, well, how do I know when the rally or the sell-off is over? And that's very difficult. That's the beauty of strategy number 9. It has a really high consistency level of telling you when that is over. So that's the beauty of this. But I'm sorry, I can't give you a live chart here because I don't have that capability right now. This is a static PowerPoint presentation. But once again, if you go back and review this, I shared with you the 5-minute chart from yesterday, less than 24 hours ago. And it's pretty much it's the same examples you'll be seeing today. The only trouble is, as I said, I would have to show you the actual strategy because we don't have the automatic arrows defined yet on the platform. And then, you would be getting everything for free. It's that simple. That's how simple it is. Okay. But remember, it doesn't matter how simple something is. I have traded other methods that are very simple, but if you don't execute it correctly, you're still going to have a series of losses. So something can be as simple as one rule, but if you executed it properly, you'll want to throw that strategy out the window and think that it doesn't work. Most of the time when we have students getting back to us telling us that something doesn't work or they're not happy with it, it's usually when I see their work, I see that they're incorrectly applying the rules or not studying. That's why we require all of our students to paper trade first. This is how you learn the method. We don't want you to just simply jump in. Imagine you've never driven a car before and you say, oh, I know how to drive. I can do it. And I've seen people drive, so I know what to do. All right. I can almost guarantee you'll get in an accident or you'll hit something. And it's the same way with trading. You know, even if it appears simple, if you don't practice and paper trade for a while, you'll most likely end up with a series of losses. So we require all of our students to do this. Trust me, I just paper traded for a good 3 months now. So I've been trading for 42 years roughly now. I still paper trade. So there's nothing wrong with practicing or rehearsing first, okay? Okay, good questions. As we conclude here, remember, I want to also say that included with this, if you want to apply this to your current platform, such as TradeStation, Metastock, MT4, NinjaTrader, even Thinkorswim, because we can apply and use that with the NinjaTrader platform. We will provide you with the add-on so that you can get it live on those platforms. But we will be having it on our own personal platform, and you'll be getting 1 year of that free. That's a tremendous discount. It's over it's close to $1,800, totally free. And I don't have time enough to go into now, but there are so many other tools included in the platform that we haven't talked about that we've seen on other webinars I've done. Just the scanner alone is going to be worth its weight in gold. There's lots of great educational information there on our platform. Things that have taken me over 4 decades to accumulate are on the platform. They're yours, free to use for a free year, okay? So once again, here's the information. Contact Pro Trader Strategies. If you're on the fence and you just want some more information, give them a call. There's absolutely no obligation. They have trading consultants manning the phones right now. They'd be happy to answer any question you have about a payment plan or about the current discounts or anything with the platform, okay? They'd be happy to answer any question, and there's no obligation. They're there to help you, and you'll see how simple it is. And trust me, 2019 is going to start in a week. You want to get off on the right direction. This is the simplest, easiest way I know to be a consistent trader. That's why I'm so excited about strategy number 9, okay? As we conclude, I just want to say thank you so much. That's the information. Remember, in the chat box on the far right is the live link that will take you to the sign-up page and more information on strategy number 9. I want to thank you so much. Contact Pro Trader Strategies with any more questions. I wish you the best of luck as you look at our disclaimer one last time. And mostly going forward into 2019, I look forward to all of you becoming students of mine in the new 2019 course of strategy number 9. Thank you so much. I'll see you next time. Bye-bye.